And the stock of the day is oOh! And oOh! Has continued to benefit from out-of-home advertising growth, posting a near 6% rise in half-year net profit on a 7.4% rise in revenue. Double-digit growth in road and airport ads offset slight falls in its street and office tower advertising units. The company's share price has also recovered from its poor trading update in May at the Macquarie conference, which sent shares down as much as 20%. And as I mentioned, stay tuned because CEO Cathy O'Connor will be joining us live to discuss the results very soon. But let's crack on with our two experts to give us their thoughts on oOh! So I will start with you, Daniel. Is this one that you like?
Yeah, look, oOh! It's a very interesting stock, and it's probably one of the most leveraged in the advertising market out there. So if you look at kind of the history of how the stock trades, it's probably succumbed to some of the most cyclical cycles out there. So positive news today in terms of the top line revenue, I think beat expectations, which is the reason why the stock has opened so positively. But there were a few areas of concern. I think gross margins have continued to fall, as well as there continues to be a lot of contracts up for renewal in the short term. So for our view, it's probably a little bit too much on the risky side in the media market. There are some opportunities out there. I think even companies like Nine or even Seven West Media, which just reported, or ARN, that they're all looking really cheap at the moment. So they could all be classified as perhaps a value play or buying a cyclical towards the bottom of the market. But oOh! Is probably just a little bit too much on the leverage side for us.
So is that kind of a hold if you have it, or a sell, or just an avoid?
Oh, look, I think today's update probably warrants a hold. If you have that top line momentum, that is positive. But there are still a few risks in the near term, especially around those contract renewals. So definitely want to be watching it closely. But I think for now, you can definitely hold it.
Fair enough. I love the fact that you say a cyclical cycle stock, a double cyclical. So, David, do you like oOh!
We've got a hold recommendation on it, and that's really because they're now trading pretty much about where our fair value is. Got a fair valuation of $1.50 on them. The share price has responded very nicely today. It's up about 7%, so trading at $1.46. So trading pretty much in line with where we think that they should be trading. But having said that, it was a good result, and it shows that the out-of-home advertising or particularly on the roadside billboards and the airports have done very, very well. And that's part of the advertising industry that's doing a lot better than most other. So we've seen a shift in as far as advertising spending is concerned, that advertisers are no longer spending as much on free-to-air TV because they can't get the eyeballs there. But they are now spending a lot more on out-of-home. So it is in a good space as far as digital advertising is concerned. And oOh! Is spending a lot as far as technology enhancements. So over time, we will see that the ads that we are seeing on the roadside or in shopping centres or in airports are more tailored to our individual circumstances, which may or may not be a good thing as far as privacy is concerned, but it's certainly part of the changing landscape. And oOh! They've invested well into that technology. So I think medium and longer term they'll do reasonably well, but currently think that they're probably fairly valued.